Hey, good morning. This is Mayor Valensky with Driving Markets. So, China is one particular crisis that we've got on the moment with a sinking economy, and that was or is number two driving economy as far as global markets are concerned, as far as global production is concerned, as far as manufacturing is concerned. However, we've got another major crisis brewing, which I'll come on to now, and I'll go back to China later on. The regional bank crisis in the US. Wow. So S&P Global Credit Rating Agency followed on from Moody's of last week and downgraded some of the US regional banks and said that they're under stress and their fiscal policies are going to be tested going forward. The regional banking crisis, which I've stated over and over again since February, is not going away. The regional banking crisis is for the moment here to stay. There is outflow of funds. They have overbooked as far as their loans are concerned. Take Charles Schwab. I was invited to pass a comment yesterday on Twitter by a group regarding the Charles Schwab 130% FHLB, which is the Federal Home Loan Book. Okay, so they've got 130% of their total equity out in loans. 130% of their equity of Charles Schwab is out in loans. Now, that is a huge amount of money. The regional banks are overextended, and the regional banks will need resuscitating. The regional banks will need major CPR and intensive care by the Fed and the US Treasury to get out of this crisis. This crisis, banking crisis, would be bigger than the 2008 crisis. To refresh people's memories, there was back in March 2008, Bear Stearns went bust, and September 2008, Lehman's went bust. Okay, those two banks were big at the time. However, compared to where we're at the moment, they are minuscule. They're minnows compared to the regional banking crisis that is brewing. And there'll be more money leaving the regional banks, and more regional banks will actually declare a crisis or bankruptcy or potential funding needing simply because they won't have the money to repay or finance their operations. Why? Because existing business volumes amongst the small businesses and the businesses that usually depend on regional banks are sinking. And if those business volumes are sinking, they are going to impact, obviously, all of the regional banks. So you can see there's going to be an outflow. We're going to enter a major banking crisis. What is the Fed and the US Treasury going to do about it? Well, the only thing they can do about it is provide liquidity. And by providing liquidity, they're going to fuel. Liquidity is basically printing money, to keep it simple. They're going to provide money to these banks or some sort of cash generation, or just alter the Excel spreadsheet by an extra few noughts and say, yeah, we've got the money, which they don't have the money because the Fed essentially and the US are out of money in trillions of dollars of debt. But they're going to fund these regional banks and they're going to end up saving them in inverted commas. However, that saving them in inverted commas is going to bring us back to the inflationary environment. The inflation is going to go back up. I've said also recently that inflation looks like it's bottomed at these levels and looks like it's trickling up. So trending up could be the new mode for inflation over the next few months. So keep an eye on that. As long as this regional banking crisis is there, there's going to be a major liquidity problem. Moving on to what I said regarding China. China is just going to continue going down. It's got huge amounts of debt. It's not reporting now its youth unemployment. It's got manufacturing that's falling. Its GDP is going to fall into lower figures, not necessarily negative figures, because you can't really believe anything comes out of China. But you're probably going to have by the end of the year GDP, real GDP, at around about 2.2, 2.3% as far as China is concerned. Next one is Bitcoin. I expect Bitcoin to test the 25,000. If it falls below that, then 20,000 is the next level for those crypto traders. Dollar yen, I expect that to go to 150, 152 in the near future. As far as overall equity markets, I expect the markets to be under pressure, which means trending downwards in the near term. We've not broken the upward bull market trend, but I expect the market short term, near term to trend downwards. Those of you who are looking to trade equity markets and to trade equities, Tesla had a good day yesterday, jumped all the way up to 240 before settling back. I expect Tesla to go back down to around about the 215 level near term. This is Mayor Valensky with Driving Markets. You can find my new book on Amazon, Financial Markets Simplified. You can find that book on Amazon. I would like all my viewers to buy that because it tells you teaches you the basics of financial trading and understanding the background of fundamentals. Have a great day. Subscribe, share, comment. Catch you later.